Good morning, everybody. It's Alan Barry Labucan here. I'm the chief market commentator for Agoracom, and we put together another great show for you today. Today we have Pat Boland is on again, and Pat has been. We've done a few shows lately. I've really been enjoying our conversation. Thanks for joining us, Pat.
My pleasure. Great to see you again.
You bet. And also today we have Rob McLeod. Rob is he's the chairman or president and CEO of IDM Resources, and also Rob is very active in the writing articles and using technology a lot more than a lot of executives that I know of, Pat. And I wanted to bring him on today and to talk about one of his recent articles and some of the companies he's involved with. So thanks very much for coming today, Rob.
Yeah, thanks for having me on today, Alan. Great to be here.
You bet. And in the prior, as we were getting ready to do the show, you guys have some interests there that are the same.
It's interesting, Alan, you mentioned that because I read through Rob's bio, and it said Queen's University. Of course, I'm a graduate of Queen's University, and Rob will speak to the quality of the mining school there, I'm sure. But I also saw in his bio Red Mountain. And coincidentally, I had a daughter that worked at Red Mountain, the ski resort. But as you say, before we came to air, I found out the ski resort isn't the same Red Mountain. Right, Rob?
Yeah, no, that's correct. And as I said, I've worked on 4 different red mountains in my career. The early pioneers were quite literal when they named different mineral prospects. And Red Mountain with IDM Mining, our project is up near Stewart, British Columbia, and is just that, a very gossainous red mountain. The red color is due to the oxidation of sulfides. And in the case of the Red Mountain ski resort in the Kootenays, that is actually the home to some old mines from the late 1800s. So, if you many of the ski resorts that you'll ski on in both in the States and in Canada, they started their lives originally as mines. And hey, who would be crazy enough to build a road to the top of a mountain? Usually, it's the mining community. So,
Well, that's an interesting story.
Blackcomb, yeah.
I also read your article with a lot of interest because you talk about what is called a project generator and then the cycles in the investment industry in small mining companies. What exactly do you mean by a project generator?
So, there's a suite of different types of junior companies out there. There are some that are, the one project. IBM might be in this type of category where you have one advanced project that receives the bulk of your attention. What the project generators do, and there's been some very successful ones over the past few decades, is where you have a big pipeline of a variety of different exploration projects, usually limited to jurisdiction or to a certain type of commodity. And so what the project generators will do will acquire a bunch of properties, advance them usually to the drilling stage, and then bring in either majors or well-financed juniors to partner up and to spend the heavy capital in a joint venture to try and make a discovery. So some of the active project generators are Kaizen Discovery, Millrock Resources. They've been getting quite a bit of press recently. But there's some companies that have been around for a long time, like Almaden Resources was one of the original project generators. And they've been a successful company for decades, making multiple discoveries. Probably, and Alan and I had chatted on CEO.chat, that Virginia Mines, led by Andre Goumand, probably the most successful of the project generators, particularly discovering the Eleanor deposit, which was sold to Goldcorp, which just recently commenced commercial production. So these companies during bear markets, they're active, they generally have a good treasury, and they're generally spending other people's money to make discoveries. So in this type of market, they're really a good one to take a look at and invest.
What's interesting about Virginia is, Pat, they've actually morphed from a project generator, And because they were so good at the project generation and the projects turned out, they've now morphed into a royalty company. So, that's sort of the progress sometimes with these project generators. If they get a strong enough portfolio, in this case, Osisko and Virginia merged together. But there's another important point, and you made in that article, Rob, that I wanted to shine some light on, which is why Pat and I have been chatting about this market since the 1990s. Why is this becoming more of a thing than it was in the 90s, Rob? This business model, if you will.
Well, in business, we often lead by follow by example, and we can see, during the last decades, I was VP Exploration for Full Metal Minerals, which was quite a successful company during that era. We made a bunch of discoveries. We had over 17 different joint ventures, and I really modeled our corporate strategy in Alaska with what Andre and Virginia did in Quebec. So, imitation's the most sincerest form of flattery. So you see a lot of good technical teams saying, okay, we've got so many different ideas. How do we make a company out of this? You can't go drill them all yourselves because exploration's so high risk. Inherently, you're going to miss on the majority of them. So you de-risk your company by bringing in majors that are looking for that world-class tier 1 type deposit that will go in and plunk in a few drill holes. If they miss, they move on to the next project. If you're self-funding that through equity markets, you're going to be diluting yourself out of existence quite rapidly. So that's why there's companies like Almaden, which I don't believe has ever had to do a restructuring, but they've been able to be active for decades and decades.
That's what, Pat. That's one thing that these prospect generators do for their shareholders is they allow them to be involved with a lot of exploration without having to dilute the company quite significantly. And so that's why this is a popular, or becoming a more popular business strategy, if you will.
Okay, so then that begs the question, when you're looking at that kind of a structure, is there an exit strategy that you sell off the property, or, as you indicated, are people moving to a royalty model more frequently? That's the first question. The second question is that Rob mentioned that their treasuries are quite strong. Is that a case that when they execute the exit strategy, they get out, they have more cash and reinvest it, or do they have to come back to the capital markets?
Well, it really depends on what you find. Almaden has spun out. In fact, they've split. They made a big discovery down in Mexico. So they've spun out that asset to be a standalone. Probably will be a takeover target down the road, and so they can monetize value for their shareholders with that spin out. In the case of Virginia, the Eleanor deposit was sold to Goldcorp. And then they came out with the new Virginia mines, where they had this extensive portfolio of properties as well as royalties, and that has since morphed into a merger with Osisko. So it really depends on what sort of success the project generator will have. And there's a couple others that are worth mentioning. There's Eurasian Minerals. Where they have a portfolio of properties all over the world, and good ones. The gold property they have joint ventured with Newmont in Haiti is phenomenal. It's one of the better ones I've seen over the past decades in terms of potential for new discoveries. It is already a discovery. Mirasol, which works in Latin America, selling assets. So it depends on the qualities. So in exploration, we'll make discoveries. We'll maybe make it 50% or 2/3 of the way to an economic deposit. And usually, if you can spin it out before then, where it's still at a risky stage, you can be bringing in a lot of cash to your company, so you can then start pursuing some of the other generative ideas that your technical team will have.
Yeah, it's a really interesting business model, Pat. And one of the things that really excites me is that back in the day, it was always, when I first got in the business in the early 90s anyways, it was always the the swing for the fences kind of play in the junior sector, all on one basket, if you will. And I'm starting to see that there is a there's a perception out there that I think that we're still a lot like that wild west days. But inside of a, let's say there's 2,000 publicly traded companies on the junior exchange, on the junior market, there's a smaller niche or group there, let's say two, 300 of those companies that are guys like Rob, and they've got these intelligent business plans, and they're not your traditional sort of fly by the seat of your pants on one project's types. And there's these models coming out, and I really like that change in the industry.
Well, you know, it's also the product generators are the few companies out there that are really doing frontier work. Now, we're all cognizant just how terrible a market it is. And, you know, if you have a junior company and you're out trying to raise cash, you're trying to raise money on a project that's financeable. Honestly, in this market, say if I have a great concept in Alaska or in the Northwest Territories or in the Yukon, and I want to go out state claims, do some soil sampling, maybe do some geophysics, I'm not going to be able to raise any money on that. And there's just no appetite for what we call greenfields exploration, which is to go into a new area and to try and make a new discovery. You know, put in the first drill hole into something. And also within my article, I talked about this, where you know, majors and juniors have such a symbiotic relationship when it relates to discoveries. Is often properties need to have a few different owners, particularly a major in at their early stage, that can do this high risk, very minimal chance or reward grassroots style exploration. For example, I can use the example with Underworld Resources. We picked up a property up in the Yukon from prospector Sean Ryan. He had capitalized on some work that had been done by Rio Tinto and done by Teck, you know, 10 years before we made the discovery, or 5 years. There had been another junior company that funded a soil sampling program that put this 8-kilometer long soil anomaly together, but there were no drill holes into it. When I saw, you know, what a large system it was, is like, okay, we have to have this thing, and we optioned the property from Sean Ryan. We put in the drills, drilled some holes, and we made the discovery, and the rest is history. But we would very likely have not come into that area if that early stage exploration work had not been done. Since 2011, there's been very little of this grassroots early stage exploration that has been done worldwide. And hence you see maybe where the cycle's broken a bit, and there have been very few big new company making discoveries and claim staking rushes. It's just because that aspect has been broken. The majors don't really do much in the way of grassroots exploration at all in this
Now,
market.
you know, Rob, I think that is a problem that is when we say a problem for the industry, Pat, we're talking about, you know, that the industry needs this to survive, to keep up. You want a pipeline of new discoveries and new developments, and those become new mines that replace old mines. You know, it's a system that works there, but it has been broken down for a long time, and this is actually very bullish for the price of the commodities, and gold and these other commodities that we're looking for, because the pipelines are so weak right now, Pat.
Well, and in fact, we saw that about a decade ago, where there was a decade with very little mining going on in any kind of a space. Rob, I want to go back to what we began with, and not necessarily Red Mountain, but your project at Red Mountain. You mentioned that project generators typically are limited by geography. Do you have your fingers in other geographies or other
Yeah,
companies for that matter?
yeah. So Red Mountain's in northwest BC, close to my hometown of Stewart, BC. But I'm also the CEO of a new junior called Copperbank Resources. And what the Copperbank was founded in 2014 by basically a four-way merger between three junior companies and Denison Resources. It's something that the industry really needs consolidation, but because of the cost, you don't see a lot of it happening. With Copperbank, we put together Full Metal Minerals Pyramid Porphyry deposit, which is located in Alaska, with International Anexco's Contact deposit, which is located in northern Nevada. It's a copper deposit as well. So we put those into a new shell, which we called Copperbank, and financed it. And we are looking at building up this kind of copper portfolio mostly in North America, but also looking at Latin America as well. And so since the company is still in its infancy, we are looking at potentially having that generative aspect by picking. There's so many great exploration properties out there. I see a couple of them every day, particularly British Columbia and in the Yukon. There's lots of great opportunities. So Copperbank is working in some other jurisdictions besides British Columbia.
Now, I noticed, Rob, that with Copperbank, you've got more of that, what we were just talking about, the prospect generator model or idea, and your IDM is more focused on the Red Mountain. Why are you rolling up your sleeves there and sort of focusing IDM on Red Mountain?
Well, it's with Red Mountain, there's really two components to the story. There'd been, I worked on the property originally straight out of university in 1993 and 1994 for Lac Minerals, a company that was subsequently bought by Barrick. Lac was trying to get the project into production as quickly as possible. So they had spent millions, and along with the subsequent buyer, Royal Oak Mines, they'd spent over $40 million on this project. Engineering, detailed drilling, underground development. So there's enough gold there right now, about 500,000 ounces worth in all categories, that look, based on our PEA, to be feasible. So in this type of challenge, but that said, the second component is just how much exploration potential is on the property. There's a 16-kilometer long trend of the same geological age and the same tectonic controls, the same host rock geochemistry and alteration signatures that you get at Seabridge's giant KSM project and Pretium's Brucejack project, which they recently just received permits. So our focus there is to get the Red Mountain project fully engineered, get a feasibility study completed, hopefully by the end of this year, and receive our permits, which we believe will be in less than a year's time. Get the thing into production and start funding the exploration out of cash flow. And, I think in this type of challenging market where, there's no appetite to keep going to the equity markets to raise more and more money for exploration, get the thing into production because it's such a close timeline. So,
Pat, in those two companies there, Rob just sort of outlined the two kind of strategies or a couple of strategies you can go. In the case of his generative model, you can go down the project generator model. Those are more grassroots. They're more risky, so you bring in a partners and they de-risk that project, and sometimes you'll have to bring in 2 or 3 partners. On his Red Mountain project, that's a little bit different. Now there's been a ton of work done on there in the past, which is laying the groundwork, the scientific groundwork, to now be able to make that a one project kind of a company. I've recently done that with 2 companies that I'm involved with. We took the diamond company, Dunedin Ventures. We got a project that had $30 million worth of work in the past during a strong time for the market, that then diamonds got out of favor during the 2008 economic collapse. The project comes back available. We get the project, we put it into Dunedin Ventures, and now we feel that that is a one project kind of company, and so we're moving ahead with that. We just recently announced it with Great Bear, doing a deal with Osisko on a project out in Quebec where it had seen $6 million worth of work, and now we're able to grab that And in the past, they were looking for more of a low-grade bulk tonnage kind of discovery, and we want to focus more on the high-grade components in this project. And so there is a kind of the dual examples, Pat, of do you find a really quality company and rush with that, or do you go on a more of a diversified type plan?
But it does beg the question. You're structuring these things as almost price agnostic, Rob. That's the kind of the description you've got. If anything, the commodities are depressed. How much leverage are these things if the commodities do turn around?
Oh, tremendously. The valuations that are on so many different companies, are so low, it's crazy. During normal markets, even if it's an advanced stage exploration project, you generally get some sort of value either per ounce in the ground, dollars per ounce, or dollars per pound in the case of copper or other base metals. Right now, the value of these things, when you look at the NAV, are just fractions. There's so many different undervalued companies with good deposits that, particularly in the case of base metals, you look the average timeline from, say, if Alan and I had a concept and we went to hit the bush this weekend and started exploring, it'll probably take 10 years to get that thing into production. Like, when was Eleanor discovered? That was 2004,
Or
2003. Yeah,
yeah,
and here we are, 2015, and they're finally commencing
actually,
production.
as of today, they turned the switch on.
Yeah, it's a commercial production. So there is quite a long timeline. So if you look out to 2025, where do we think commodities would be? And, there just isn't the new supply for precious or base metals, period, out there. Assuming the world continues to grow at a steady, albeit smaller, 3 or 4% per year, there just isn't the new supply that's going to be available out there.
And that
It
goes
won't be
back to
there.
the point earlier, Pat, about how the problems inside the industry, back in the 80s and 90s, we call that the lost generation. The prices of commodities were so low that you couldn't really go out there. People didn't want to go to university to be, geoscientists. And so there was a real lack of people in that age group. And, so that had a way of playing itself out in the exploration so that's why the pipeline on the supply side is so tight, Pat. Even though we've had, back in the 90s we had 60 cent a pound copper and 290 gold and stuff like that. Now we've got $1,200 gold and, $2-3 copper, but it still hasn't become any. The pipeline is still very weak, and it's not getting stronger. So, there's certain times when it's a good time to be a builder of something, and when everything's dire is usually a time when you want to be picking stuff up. Rob's been very active. I've been getting a lot more active. I hadn't been involved in I had sort of let my consulting business die off a few 4 or 5 years ago, but now, because of the opportunities that Rob was talking about, it's a good time to be a builder and building for the next more positive cycle for the
And,
stocks.
and with our company Copperbank, that's the other aspect to our company strategy. We, on that end, again, we're emulating. Probably, and Alan might disagree in terms of what the most successful company was in the last cycle. I would point to Lumina Copper, a Ross Beatty-led company, where in the early 2000s they acquired what were considered four dog Latin American porphyry projects. They added a bunch of value to them as the price of copper went up. They ended up selling 3 or 4 of these. I think the overall multiple for Lumina was something in the order of 50 bagger. So with Copperbank, between the Contact Deposit and Pyramid, here we have two quality projects that nobody's going to start spending money on to develop at 270 copper. But if we start looking past 2017 and 2018, when you're going to see this real supply crunch for copper, that's when these projects that are, honestly marginal in today's economic markets are going to be the next ones to become a focus and be developed in the years ahead. So Alan's absolutely right. Now is a great time to be acquiring these assets that have limited value. You can look at the gold space too, with the Cisco buying Canadian Malartic, which was a dog old mine, and they turned it into a big bulk tonnage style operation when the price of gold went up. So it is a good time to follow companies that are acquiring assets that will be poised for good things once commodity prices and markets recover, and they always will.
Yeah, well, we've seen that before, haven't we, Pat?
We have, Alan. It does sound very exciting to get in on a kind of a ground floor basis.
And these cycles sort of come around once every decade or so, Pat. In my career, in the late 1990s, nobody was paying attention to anything we were doing in the resource space. And then 2001 came along that started the move in the price of gold and other commodities. And I've seen it again right now. I think we're at another time where there's a low. And I think this current low is a lot to do with the parabolic move in the price of the U.S. dollar, which has suppressed the price of many commodities. But I don't think that is a long. Currencies don't go up like this for very long, Pat. This one's been going virtually parabolic since about May of last year. And so I think that it's not only good timing to be looking at it from an industry perspective, looking at putting companies together, but from an investor perspective, which what this show is all about, is that this is also a time to be doing your homework. And I'm really glad we've been putting these shows together, Pat, lately, and I think we're giving some viewers out there good list of companies to look at.
And Rob did a great job outlining the history of the project generators. Great job.
Yeah.
Exactly, and that's one strategy I think that investors can look at. So on that note, I wanted to thank Pat again for joining us, and Rob. We'll have to do this again. Thanks a lot for coming on again, Pat.
My pleasure. Thank you.
Yes, it was a great show, and Rob, thanks a lot, and we'll get you on again. We want to hear more about IDM and your copper bank and other things you're working on. We're coming into the time of the year when I think you're going to be pretty busy, so we'll get you back on again, Rob.
Yeah, sounds great. Thanks for having me on, boys, and have a happy Easter.
Absolutely. Nice to meet you, Rob.
Thank you. Thank you, guys. And before closing, I always want to remind our viewers that this show is for information purposes only. Before making any investment decisions, it's important for you to speak with your financial advisors, including your wives and spouses and everything else, and do your homework. We don't want to get anybody in trouble here. So on that note, everybody, have a great day, and we'll talk to you soon.